Hey everybody, what's going on? Jamie Saettele here with SB Trade Desk. This is the Signals webinar, or we're calling it the beta testing Signals webinar. If you're in this webinar, you are one that signed up or requested to kind of help us test it out. So let me know before I get going that you can hear me. And Pooja, she's already ahead of the game. She says, "Hey, what's up? All good, super great." We will start here with a little slide presentation I put together. And I came up with a catchy name for it. Okay, I'm calling them the Rip and Dip alerts. Sounds cool. You'll see the substance here behind it a little bit. It's not just a catchy name. All right, so I want to talk about trend. Really simple but important concept. And like everything else in this business, we all try to complicate things. So we're going to try to dumb it down and simplify things here. I'm going to talk about actually why we're doing this presentation now. All right, we'll get into the specific markets, currencies, and several commodities actually that have tested well with this some of these alerts. And I want to stress throughout this that this is not a risk management tool. It's not a system that you just leave on and say go do what you're going to do. These are alerts, okay, and it's really meant to be complementary with what I do with the SB swing updates, and even what Mike does to an extent, because we can turn on the alerts on even shorter term time frames. Okay. We will also get into as the short-term euro-dollar system, which is more actually of a system. I'll get into that later. And then how you're going to receive these alerts, the alert FX details. All right, so trend. Problems with trading trend. We've all been there a million times. Markets go through cycles of range expansion, which is trend, okay, and range contraction, which is range. Trend systems and alerts that I'm going to show you work really well during times of trending period or range expansion period, whereas they'll get absolutely murdered during range periods, right? So it's not just as easy as saying we have this, these decent alerts or whatever. I'm going to turn them on and see what happens. You really need to look at it in the context of the market environment. One reason that I'm really doing this now, this presentation, is that I think we are on the cusp of a change in behavior in the markets, right? So like think back to, if those of you that have been with me for a long time, if you can think back to the summer, spring, late spring, early summer of 2014, we were in that really low volatility environment. And I was writing about the risk that we transitioned to more of a breakout environment in FX. And sure enough, we got really starting in May was when the dollar ended up bottoming, but euro went into this trend that really, we really haven't seen with the euro. Maybe with the Deutsche Mark back decades ago, we saw straight line moves like that. And then on the opposite end of the spectrum, you had into March of 2015. Where it was a straight line move and everyone said the euro was like over, and sure enough, since then we're actually unchanged. We've been going sideways. Okay, so basically 2 years of sideways, over 2 years of sideways in the euro. We're probably due for a change in market environment, whether that's up, down, or the euro, is really, it's not that important for the alerts actually. The emotions that attend these problems with trading trend. Right? We see a breakout, you wait for the pullback that never comes. That's a pretty common one, right? Oh crap, I missed the breakout, right? And then you feel like you're chasing and you're chasing and you're chasing and you don't want to chase, right? Bad habits. But is there a calculated way to chase, right? One of the problems too is that you have stop points that may be too far away, because you don't want to put the trade on and then have it go, even just a minor reaction takes you out, because the trade really still valid based on the analysis. But again, is there a calculated way to chase a market based maybe on minor reactions. It's easier to do if you have a quantifiable method, and that's what we're trying to do with these alerts. All right. So in real simple terms, we're just looking to identify relatively minor reactions with momentum. And the concepts I'm going to talk about, next really is nothing new. You guys have seen me talk about this stuff a lot, and probably others too. But let's just, visualize here. This is a visual of dollar yen. Okay, we're going back to September of last year. You had, a range environment. Okay, this was the election. This kind of tripped me up. I was short and long, and then, this whole thing screwed me a little bit. But irrespective, you did get this big breakout. And if you recall at the time, I was writing stuff in the swing updates like, well, we're going to at least 111, 112, ended up going to 118, but really wasn't able to catch all that much of it. Right? We caught a little bit on this reaction back here. Remember, we caught some at 111.40, 111.50, and up into here, but we really missed out on a lot. And is there a better way to identify reactions within this? Because if you look at this, it looks like a straight up. It just looks like a straight line move. Okay, but here's the kicker. During breakout, after a breakout, when you get a trending move, even one as sharp as this one, there are still reactions to get into the move. And you can't view the reaction or the pullback that never comes, right? You can't view it as an absolute price reaction. What I mean is you can't be saying, I'm looking for a 100 pip pullback or whatever, okay? You can't look at it as an absolute level. It needs to be viewed in the context of momentum, which is a function of both time and price, right? So what looks like a small absolute price reaction might actually be enough to relieve, the excess on the move higher or lower if you're looking to sell a rally and allow for continuation. So if I move on, this is with the overlay of the alerts, our little RSI dip and rip deal, right? And you can already see just by looking at this visually, this is a screenshot of this was taken yesterday. So you can see it's relatively updated. It was actually giving short signals on the way down, even though we've been long, but it's actually working out pretty well. I think we are up about 60 pips right now. But you can see that in range periods, it's not going to do too well. Okay. But once you get a breakout, it actually does give you a calculated way to chase. And so it's giving you alerts based on a divergence between time and price. And that divergence is really the reverse divergence, right? We've talked about this a lot. If we go back to the price chart, you can see you get this dip in RSI, the first one after the breakout. This is a 4-hour chart, by the way. I found the 4-hour charts to work particularly well with this. Obviously, you can do it on any time frame, but if you go down to hourly, you start to get a little, I think, too much noise. Daily is you get way too wide of targets and probably not enough signals to make it worthwhile. But you can see the reaction price. This looks relatively minor, right? You'd probably be waiting for something deeper, and it's just never going to come. But with RSI, it's actually enough to trigger this. Now, again, not a new concept here. What makes it valuable, at least what we've done with it, is provided a time element into it as well, which I can't really give that all away, but just understand there's a time element here, and that's where the value is, and that's what gives the specific, signal or alert, if you will, at the, at a particular moment in time. Okay, now what about taking advantage of trend? That means two things to me. It means taking more out of the move. In other words, if you have let's just say that from this breakout point, call it 105, up to 118, 1,300 pips. Taking advantage of the trend is trying to take actually more than 1,300 pips of the move. The other thing it means, of course, is adding to the trade, which is a very difficult thing to do psychologically, right? Because as humans, it's our human nature to want to, succeed. Oh, we got a profit, I'm going to take it, right? And then, with losses, you don't want to admit you're wrong, right? Taking a loss is like admitting you're wrong. So you don't want to take a loss. So people ride those losses. It's just, it is the most cliche thing in the trading world. People talk about it all the time, but it's true. Again, if you have a calculated, quantifiable method, to follow the move, and not just follow the move, but gives you an idea of when the reaction's happening, which gives you the best, most opportune time to get in, success. Okay. So that's what I mean by taking advantage. Mainly adding to winners, but it's also taking more out of the move than is really there. Okay, so let's go into why now. As a trader, right, I'm always trying to buy support and sell resistance. So you could say that in a way, this is trying to buy support within these alerts, and you'll see what I mean by that when we look at the tests that are coming up here. So with some exceptions, of course, dollar has been in a range. I mean, mostly euro dollar, right? I mean, Aussie has too. Aussie Kiwi has been really bad to trade, even though it had an uptrend going from August 2015, but it's super choppy. Dollar CAD's been pretty terrible as far as its flow since May of last year, since the low. You've had moves in cable, but cable's been tricky because literally, how much of that was over the course of a few hours in Brexit. And with some exceptions, dollar yen, you've had some good moves in dollar yen, right? But euro has been a disaster. And again, market cycle between range and trend, and we're in a prolonged period of range here. So just again, as a trader and thinking of this from a contrarian point of view, I'm looking for a return to trend, in which case these signals are going to start working out. You want to be prepared. That's the biggest thing, is you want to be prepared to take advantage of a change in market conditions. You can't do it on the fly. So we want to have these alerts in place, and ready to go once we start to see breakouts in things like euro or whatever. It could be euro, it could be dollar yen, it doesn't matter. But once we start to see breakouts, we want to be ready and have the plan in place so that we can take advantage of it, not just like, oh crap, here we go. We're gonna chase this. So yes, preparation is key here, and that's the biggest reason we're doing this now. All right, it's important to understand adverse conditions. So we're going to look at some of the tests on these alerts. And again, I want to stress these are not standalone systems. These are simply, this is what the tests look like if you would have taken all of the alerts and trailed it with a 5-day high-low stop. And we'll look at I'll bring up live charts in a little bit too, and to show you what I mean by the 5-day high-low stop, what that looks like. And just what the live charts look like. We can look at recent signals if we want. All right, so here's euro. All these go back 6 years, by the way. So we're looking at 6 years on a 4-hour chart, about 350 trades. Okay. If we look at where the drawdowns have really started, let's look at, there's 2 periods of drawdown really within these alerts. You've got this period here, which is March of 2013 to July of 2014. That, not a surprise, the dates here, July 2014. Again, that was really kind of low vol before things broke out. And then, of course, right here, not a surprise, this is March 2015. That was the euro dollar low. And since then, we've been in a sideways market, and these alerts are not going to do that great in a sideways market. Here's what it looks like on the chart visually. So this was the first period. And you can see it is an uptrend, but it kind of reminds me of Kiwi in a way over the last, or since August 2015 up into last year's highs. It's an uptrend, but it's really choppy, right? Overlapping, really it's corrective price action. So even this stuff, the alerts did okay because you had even the counter moves were tradable. This is kind of straight down and then reverse. And obviously since the March 2015 low, it's been kind of a disaster. So visually, you can see trend range. We've been in a range for 2 years. Time's probably about right for us to go into some sort of a different, market conditions change, and that would be heading in, from range to trend. I like to call this, by the way, when we have these overlapping corrective price behaviors, whether it's sideways like this or on an angle, whether up or down, but obviously overlapping. I like to call it caged price behavior. In other words, the market's in a cage. It's not allowed to travel freely. Okay, this is cable. So this is the pound dollar. Again, going back 6 years, about a little more than 350 trades. You've got the big drawdown from December 2013 to December 2015. So that's 2 years where it really didn't do very well at all. Gave back a good deal, a good chunk of what it had made on these alerts. And if we look at, I don't have a chart of that period. Anyway, here's dollar yen. You can see a little more steady actually, dollar yen. The big drawdown here is from July 2013 to August 2014. Okay, and we can see here on the chart, that was this period, which really culminated in just a crazy low volatility environment. So you can see recently dollar yen's done very well, as you would expect it to, with a move like this. This is my favorite one. This is dollar CAD. And dollar CAD did well for, 5+ years. And since the high in May of 2016, it's given everything back and more. Now, this tells me two things. And it should tell you two things as well. One, and I say it time and time again, this is not a standalone system, right? There's no risk management really in place. I mean, there's the 5-day high-low thing, but there's no real position sizing. There's no, it's literally just a simple alert with a 5-day high-low trailing stop. It's not meant to be turned on and left on. You have to do your work ahead of time. So we would be looking to turn things on that we think are going into a trending move. And when we get, these volatility spikes, okay, such as we had last January and last May, you'd be wanting to turn it off, right? So, I'll decide what markets we're going to be turning on or off and what alerts are going to be sent. Okay, that's the big part. That's the work. So it highlights that. It also highlights the fact that just looking at this here is that this is so insanely terrible. Giving back in less than a year, it's given back everything and more than it made in 5 years. This tells me that dollar CAD is probably, if there's anything due for a directional move, it's probably dollar CAD. All right. Talk about markets oscillating between range and trend. I mean, this is about as extreme example as you can get, right? And we know what the chart looks like. So, it does well for all of this and then loses everything and more during this. So it's not just having, alerts that can take advantage, of market conditions, trending market conditions when they occur. It's also having the ability to recognize when they don't work, okay, and try to avoid those periods. These are just different stats. I'll have, I'll post this. I'll post this on the website, of course, and you guys can check it out. But it's just another way to look at the results. So, like the Euro yearly stats, again, going back to 2011. You can see the amount of pips it makes, or 2016 loses, gives back most of 2015, right, in the range period. So far this year, it's actually done okay. Cable stats, dollar yen stats. 2016, obviously good year, made up pretty much all of that was at the end of the year. Dollar CAD stats, you can see just the complete disaster that's happened with dollar CAD recently. Also wanted to show this on different markets, right? So this is gold, and commodities, commodity futures trade a little differently than FX, but we want to show this on commodity futures to illustrate that the logic is sound, right? It's easy to pick like a couple currency pairs and say, oh, see, look, it works during times of trend. We wanted to show that price behavior is price behavior, whether you're looking at currencies or crude oil or gold or, whatever. So it does pretty well with gold. And the big gold drawdown, as you can see here, we have two of them, but the really big one is February 2012 to April 2013. And then actually last year, March 2016 to September 2016, I had a big drawdown. Okay, and here's those two periods. You can see that, pretty choppy. This was actually a pretty good move, right? But for the most part, this is choppy, overlapping price behavior. And that's when it doesn't do well. Now, the gold, the signals on gold, or the alerts on gold actually did pretty well since the election. Okay. Here's crude. It does really well in crude, which is not all that surprising because crude is a more volatile market, and these alerts are going to do better in, volatile markets, right? It needs volatility. It needs, kind of sharp moving market in order to do well. It's been in a drawdown since February of 2016. So which is essentially the volatility low for crude, realized volatility low, right? Not the implied, but the realized volatility low, and the market's actually kind of started slowing down, right? After we came off the low, we had a little bit of a V bottom, and since then things have been really quiet in crude. So these are the two periods where you have drawdown, again, for the most part, overlapping corrective price behavior, especially recently, right? When I say recent, I mean over the last year or so, essentially since the summer top last year, with some exceptions here, some declines, sharp. And here are the stats, again, the yearly stats, gold and crude oil. So, you can look those over later. Again, not a standalone system, just wanting to illustrate what if you were to take every single signal that was given and hold it with the 5-day high-low stop, this is what would happen, or what would have happened. Okay, so not a standalone, I keep saying that, but I want to get that across. I will determine when the, with the analysis, when and what we want to turn on. Essentially, you want to turn on things after you've had a good deal of consolidation and you get, good sign of a breakout. And in that sense, it's really complementary to the analysis that we do here at SB. Okay. Now, what about the Euro short-term alerts? So this is the same entry logic, but it's on a 10-minute chart. Obviously, you're going to get a lot of signals, and because of that, it does not trade during Asia, and that's actually primarily because of transaction costs, which you'll see. It does incorporate a stop and limit logic. So, and there's two ways it gets in and out of or gets out of the trade, I should say. One is actually a percentage of the square root of price, right? So, right now, Euro's trading 106.92. So 106.92. So the square root of that is 103. So 103 pips would be the square root, and we're taking a percentage of that as the stop or limit. That's all. That's it's all that's where that comes from. And there's also a 3-hour time limit for trades. We have fooled around with 3-4 hour time limits. A 3-hour time limit, basically, if the trade after 3 hours, it's kind of done. It's not. This doesn't really ride. This isn't necessarily a trending trending system. It's more of tries to get into a very short-term move, 10-minute chart, and tries to ride it. And if after 3 hours, it's over. So this is what the equity curve looks like. And we're talking, this is like over almost 3,000 trades going back 5 years on a 10-minute chart. And it looks like the Holy Grail, except there's a problem. This is what it tests like without spread. Wouldn't life be easy if we didn't have to pay the spread, right? You didn't have to pay the VIG, it would be great, but that's not real life. And this is what it looks like when you do have to pay a pip spread. So you can see that it takes, a big chunk, right? But that's reality. So, you might see a lot of people out there pushing, BS systems that anybody can make a back test that says it looks, whatever, and then they don't put the spread in it, and you start trading. You're like, what the hell's going on? Now, this is not going to be for everybody. That's for sure. Here's some stats on it. This is again 5 years. This will give out 2 to 3 trades a day. Okay, so this is not for everybody. Probably not for most people, but for those that are looking to maybe trade really short term, this might be more like up Mike's alley. You can see that the average winning trade is a little over 17 pips. The average losing is almost 16 pips. So the edge is tiny on this. All right, and it's winning about half. Okay, so this is not something that you should expect to turn on and get rich quick, or anything for that matter. But it tries to take out 30 to 40 pips with the percentage of the square root of price, but ends up taking roughly 17 on winners and losing about 16 on losers. Okay, and there might be times when you want to turn it on during sharper moves too. Okay, Alert FX. So Alert FX, this is you guys are going to be, you're already signed up here, right? If you did the request to help test it for beta and everything, this is where you're gonna see the you can see recent executions. You'll go to alertfx.com dashboard. You will see the recent executions. You can see this is going back about a day. I think it's showing the last maybe 10 or so. And you can see here, I've just been testing it a little bit, and but you'll see that it's got the Euro dip rip. These are the 10-minute ones. And if it says RSI REV, that means it'll be on the 240 hour or the hour or an hourly. All right. And I had, I put dollar yen on there, for example. I wanted to test to see if it worked. Dollar yen long signaled at 111.04 this morning at 9 a.m. Dollar yen long triggered 111.07 this morning at about 8 a.m. So you can see all that. If you go into the this is also where you go if you want to go to, let's see, alert details. Let's see here. Do I do this right? Alert details. If you don't want to receive alerts, say it's just getting to be too much for you and you're like, man, this is crazy. I don't want to get all this stuff, because it will send you emails. All right. They'll send you emails and it'll pop up. A lot of us probably, have smartphones or whatever. So you can see the email pops up on your screen and you say, oh, there's an alert here. You can always see it. But if you don't want to receive it, it's just, becoming too much. There's a disable option. So just disable, it'll stop sending you stuff. And if you want to come back and get them later, you can always log back in and enable it. So there's that option. Devices, say you want to add or change an email, you can register a new device. All right, just click here, pretty simple stuff. And also you can actually add your own alerts. This is a totally different website, but if you wanted to create an alert, you can do that. So like say you wanted a price alert, I don't know, say you wanted to say, I want a price alert. I want to know when Euro, daily chart. Okay, I want to know if the cross is above, You can pick a price or an indicator or whatever. Okay. So, you can click here. I want to know if I did this, it would price cross above 107.43. It would send me an alert. That's all. Save new alert. Okay, I'm not going to save it because I don't want it, but you can do this too if you wish. Just totally different deal. Let's look at a few of the charts actually to pull it up. So here, this is actually the Euro short-term system. And you can just see over the last day, for the most part, it was wrong early, but then it started selling. Actually caught some last night, I guess, or no, that was yesterday during Asia or during Europe. It did sell this morning, but it covered at the worst possible time before this big drop off that we just had, pretty much as I started this webinar. And Gary says, do we need to register? No, we'll be sending out, you should all, because the people that, if you requested to get the emails or to help us beta test it, then you'll already be, you should already be registered. Okay. So we'll send all that out later. But I want to show you an example of like how we might be using this. Okay. So you remember back in, the middle of the month, right? And we were buying pound dollar down here. Actually got stopped out right here, literally right here. And then of course it took off on the upside. When I'm writing the updates, I can say all day long, like, oh, I'm bullish pound because of this or this or this or this. But, we want the entry, and I was putting in entries, but they're not getting hit, right? We're not getting the pullback we want. This is the 4-hour chart. Yeah, Gary, I will let Mike know. He's taking care of all that stuff. So I'll absolutely let him know. But what I can do, or what I will do, is, I'll say, let's say I'm writing the update, and I'll say, you know what, cable's really, it's really going, and I think it's ready to, to make a move. I want in on a dip, but the support that I'm looking at to buy, like if we're looking to buy back here at 123, but it never got there, I'll say, I'm going to turn on the 4-hour pound dollar alert. So, you'll be getting an alert to, to say when this blue dot happens. Okay. And then it'll send it to you automatically. So, you'll have an idea that cable's actually reacted enough where it is allowed to go higher again. Okay, now I might not follow it to a T. This is, I'm kind of mixing discretionary and, some elements of systematic stuff here, because we'll be looking at, I'm not going to hold it and trail it with a 5-day stop, because if I see us getting up into resistance, remember we had the square root level at 126.11 was a huge level. We ended up failing there 2 days ago. So that's just an example of how we might be looking at this. Here's the dollar yen chart. Here's the, it's been in a range, right, for a good part of the year. I mean, down, but sideways range really from mid-January until mid-March. And then we have had a little bit of a breakdown, but this is another example, right? If we get, start getting a breakdown, like back here, we wanted to short 15.09, but pulled it because we had Fed coming up and didn't want to just gamble on the Fed. So, after the market comes off, you're looking for a reaction to sell. You never really get it. Might turn on the dollar yen sell alerts at that point. And, this alert, for example, was at 4 a.m. my time. So, I have to sleep. And this helps me, be able to show or share, opportunities to send to you guys when I'm sleeping or whatever, because it'll be automated. Graham asking, what are the magenta dots? Yeah, that's just divergence, right? So that's divergence. Remember divergence, I have a very strict definition for divergence. Recall, it's with RSI, but RSI also has to be above 35 or below 65, right? So it's not, you know, a lot of people see divergence seemingly every day, everywhere, all the time. You know, divergence can, in that sense, can last forever. We're actually looking for a very specific definition of divergence. It actually has, excuse me, it has nothing to do with these alerts, although I guess I could make an alert to send out divergence as well. What about, there's other time frames too. Like, okay, for example, I know the tests I showed you were on hourly, or sorry, 4 hour. But let's say that, you know, this recent breakdown that we've had in euro, right? We were long for a while and we ended up getting trailed out, which I'm fine with because I was either going to make 90 pips or, you know, 300. And the trail stop was hit at 90, so whatever, I'm fine with that. But, you know, we can also, if we start breaking down, you get a sharp move. You can see on the hourly, this actually, the alerts would have caught each dip, right? Or each rally would have been faded. So it's fades the rally, it fades the rally. And this was Europe, 2 a.m., you know. So it's an exciting new, I think, opportunity to complement what we already do, right? So like, what are we, as an example, what were we looking at last night? And we don't have to, it doesn't have to be just on these majors either. You know, we had a CAD yen. CAD yen, right? We're looking at CAD yen on the long side. I still think this is probably going to be a better setup as it pulls in a little bit, but same thing. You had a dip last night at 4 a.m. You'd have gotten that signal on the hourly. So, you know, and we would have turned it on CAD yen because this is the one that we've been writing about, or I've been writing about in the swing updates and saying that there's all kinds of reasons for this to go higher. And, you know, pay attention, get ready, because I'm going to turn on the alerts. If it gives an alert, you might want to pay attention to it. Okay. And this was the dollar yen. Again, I turned on the dollar yen one last night just for tests because I wanted to see what it looked like in real time. And sure enough, it came in, ended up alerting us to the low of the day here at 3 a.m. at 110.93. For us, that's good. Our stop was 110.80, so we're still long. Cool. All right. Are there any questions? I need to make a note here to make sure that everyone gets their information that they need for the Alert FX stuff. And we'll, you know, be looking to, I'll have information as well in the swing updates about how to manage this stuff, right? Like say, okay, we're turning on the so-and-so system. Let's just say, for argument's sake, let's just say that I want to turn on the dollar CAD system for shorts. Pooja says the alerts also get the stop level. No, that's actually what I'm going through now. So let's say that we start to break down in dollar CAD if that were to happen. Okay, and Gary's asking, how do I know when to close the trade? Okay, guys, this is not a standalone system, right? This is what I'm trying to say. These are just the alerts for entry. Okay, this is not a system. This is just the alerts for entry. It's part of it's basically one component of, you know, of the process, if you will. So the process, you know, where I'm doing analysis and I'm providing all of that analysis in the swing updates, right? We're saying, for example, if we go to swing updates here last night, let's go to the swing update from last night. Okay, swing update. Okay, so we have a swing update here. Let's go to the dollar CAD daily chart. Okay, dollar CAD daily chart. Remember we put an entry last night to go short at 33.55. Actually didn't trigger. High was 33.47. Go figure. No, we put it at 33.50. But anyway, so we didn't get triggered. We have a target because we're looking for 32.10. Right? So let's say that I write and I'm like, okay, guys, I want to be short at so and so level. But you know what? This market's kind of getting away, and it might be one where we need to turn the alert on because I'm not sure, again, waiting for that pullback that never comes. And this is not a great example. I'm just using it because it's current, right? By no means is dollar CAD in any sort of runaway market. I mean, it's in the middle of the range. It's doing absolutely nothing right here. But let's just say it were, for argument's sake. I would then say, you know what? I'm going to turn on the dollar CAD alert. And so if you get the alert that says dollar CAD is a short, that would be it. This is the stop I want to use, and this is the level I'm targeting, right? It's not like the alert's going to send you a trade with here's the short, here's the stop, here's the target. No, it's just sending you the alert that the conditions have been met for a short to be triggered. That's it. Based on this, right? So it's like one step in the process. And, for me personally, this is something where I think it's good to have in place because once we do get into, so like, this is dollar CAD, right? It's been absolutely hammered. Let's look back a little further. Hold on. Let's go back 2 years. So as we saw, the dollar CAD alerts they would have been terrible. You gotten murdered if you were trying to sell them or play them ever since the low back here in 2000, last year's low in May 2016, because, it's just been a chop fest. But once we break out from this sideways pattern, you're going to get good moves in dollar CAD. And, for example, on the way down, let's say that back in, and I remember this specifically, back when we were coming off the January high, we were looking to short levels like up here at 44. Well, you know what? The market never got there. It got to 42.95. Okay, so I might be turning on the alerts to go short dollar CAD, and once the alert's sent out, it tells you that, oh, the conditions have been met, might be time to put on the short. Okay, so during a trending move, it will do very well in catching minor tops in a downtrend. Okay, or during an uptrend, catching minor bottoms, buying dips, right? The point is that we've just got to be prepared when those conditions, confront themselves, right? When conditions change, that's all. And that's what this is all about, being prepared, getting ready. But again, it's complementary to what we already do. This is not the end all be all. I'm not just going to turn on some systems and take a vacation and say, okay, great, here we go. I'm going to come back rich. No, it doesn't work that way. All right. Any other questions? Any other things you guys want to talk about here as it pertains to this topic today, right? We did our market webinar yesterday. So I don't want to start getting into all kinds of different markets and market analysis things. Other than I will say, watch Euro at 106.50, 106.70. Might get a little bit of a bounce. Okay, all right, well, I'm going to wrap it up then right here. Again, we'll have Mike make sure that everything is sent as far as the Alert FX details are concerned. And, consider it, we're starting on this, using these alerts basically, tonight. I'll put in the swing updates. when alerts will and will not be used, right? Don't expect it to be all, every day, all the time, okay? Especially with the 4-hour charts. These aren't things that happen, all the time. We're looking for trending moves. Trending moves obviously are few and far between. But it may be something where I'm looking to turn it on an hourly chart just for a quick entry as well. All right. Okay, so I'll leave it there. Again, thank you for attending, everybody. And we'll have out the update later, as always. Peter says, looking great. Can't wait to try it out. Yep, I can't wait to get started with it and get the feedback and everything. And really a starting point here for something bigger. I truly believe that. Okay. All right. We'll talk to you guys later. Bye.